Hello everyone, welcome back to the question number 2 of your June 2024 paper, and I hope you have already done the question by yourself and then you are looking at the video. So that is the most effective way of learning. So not wasting any time, straight away moving on to the requirement. Make sure first of all you need to always read the requirement and understand what the examiner wants, and that is where you go to the scenario, remove the unnecessary facts which the examiner gives you. Maybe that will waste your time. So make sure first of all you go to the requirement, what the examiner wants, and then you go to the scenario which will give you a clear path to be able to give your answer in the most effective and an efficient way. So not wasting much time, straight away moving on to the question. The question will be shown to you in the big screen. The screen will be enlarged. So here we go. Calculate D's revised taxable tax adjusted trading profit. So this is very important for the year ended 31st March 2024. Your computation should commence with the draft profit per accounts. Yes, that is very important. 29,800. Indicate 0 any items which does not require adjustment. So that is very important. You need to mention 0, and then calculate D's taxable income. This is very important. Not the income tax liability. They are telling you to give you the taxable income, and then the two advantages for an employee if their employer had payroll the taxable benefits, right? Okay. So the first question what they are asking is revised tax adjusted trading profit. That is very important. Okay. So the taxable profit is what they are asking. So first of all, you have to make sure if the examiner wants you to calculate the taxable income, you are not going to waste your time and calculate the income tax liability. So that is very, very important. Make sure you keep that thing in your mind. That will waste your time. So make sure if the examiner wants only to calculate the taxable income, make sure to give that only, because you will need time. So managing time in this paper will be key to success. So not wasting much time, straight away moving on. So the taxable, okay, the trading profit. So how much is the trading profit? The trading profit, it is 29,800. The question is in front of me, and I hope the question paper is in front of you as well. Okay, so 29,800. 29,800. And then we are moving on. Advertising expenditure 1,300 incurred during November 2023 to promote D's business. So what is this? Is it an allowable or a disallowable? Yes, this is allowable. Why? This expenditure is incurred for the production of income. So make sure you understand this expenditure is incurred for the production of income. Any expenditure that is this type, that is allowable expenditure. Okay, so advertising expenditure, how much is it? 1,300. Okay, so 1,300 is your advertising expenditure. And then expenditure incurred on client entertaining. Yes. Is this allowable? No, this is not allowable unless it is the expenditure that is incurred on entertaining employees. So these are the small points. If you have followed my classes, if you have followed my recording, the videos, if you have followed my theory notes, this is just a walk in the park for every one of you. So the client entertaining. This is, you cannot reduce this. So make sure, so the trading profit, yes, the trading profit, these expenditure, these adjustments are not made yet. So you don't need to do any adjustment, but make sure you show this as 0. So, and then moving on, the cost of D's office. Yes, D runs. So the note number 1, they have given us the reference and the capital allowances. So the note number 1, D runs his business using one of the 6 rooms in his private house as an office. The total running cost of the house for the year ended 31st March 2024 was 2,400. So he is using only one room. No deduction has been made. Okay, he's only using one room out of the 6 rooms. Yes. So what you need to do? Yes. So this is the D's office. Okay. Office. So you need to show a working. How will you arrive at this value? Yes. So the working one, you have to show this, and then how much is the total value? Yes, 2,400. Okay. You divide this by 6 and multiply it by 1. Why did I do this? That is because there are 6 rooms in the entire house. So this 2,400 is related to all the 6 rooms. So what you need to make sure, you need to always get only for one. That is because this is the expenditure that is incurred for the production of income, the business related portion. Yes. So the 2,400 is this. So 2,400 divided by 6 multiplied by, yes, you won. So this will give you 400. Okay. So this 400 is an allowable expenditure. You can reduce it from your profits so that your profits are less, your taxable income is less, and then your income tax liability is also less. And then the capital allowances clearly given in the question. On 1st January, D purchased a laptop computer for 1,200. The laptop computer was sold on 20th March 2024 for 400. D had elected this laptop as a short life asset. Very important. These words are very important as clearly given in the question. A replacement laptop computer was purchased on the same day for 2,700. Clearly given in the question. The question is in front of me. I hope it is in front of you as well. So what you need to do, yes, they are buying the laptop for 1,200 and selling it for 400. So there is a loss. What is this loss called? Balancing allowance. Okay, so balancing allowance is the term for this loss. Okay, so what you can do, yes, balancing allowance. Balancing allowance on laptop. Okay, on laptop, what you can do is you have to do this 1,200 minus 400. You have to reduce 800. Why? Now you may be wondering, why is this? Yes, because why are we doing this? The entire loss is taken as the capital allowance. Yes, why? That is because if it is a short life asset, okay, if there is a short life asset and there is a loss on disposal, okay, that is the loss on disposal, which we call as balancing allowance, and in that scenario you have to take the entire amount as 800. Now you may be wondering, what if this was not a short life asset? Yes, what if this was not a short life asset? Yes, in this situation what you do is the lower amount, okay, you take the lower amount from the proceeds and the cost, and then you take 18% or 6%, which is the main pool or special rate pool. So either you apply 18% or 6%, and then you can do this. So if it was a long life asset, this would be the treatment would be different. Because it is a short life asset, we are taking the entire amount as the balancing allowance. Okay, and then moving on, there is one more. Yes, they have purchased a replacement computer, a replacement laptop. Yes, how much is that? Yes, 2,700 multiplied by 100%. What is this? AIA. Yes. Annual investment allowance. Yes. So you can directly get 2,700 capital allowances for this. Why? That is because the annual investment allowance, the limit, this does not exceed the limit of the annual investment allowance. So this is 2,700 and you can directly take this. And then there is a car that they have purchased. In the question it is clearly given into the business at the market value of 14,000. The car has carbon dioxide emission rate of 39 grams per kilometer. So the examiner is making your life easy. If it is less than 50 grams per kilometer, you can take 18%. That is, you can put it in the main pool. The car is used 80% for business journey. Okay, so the car, you can mention the working here itself. How much is the value? Yes, 14,000. You get it for 18%. Why? That is because this is related to main pool. Why? That is because the carbon dioxide emissions rate is less than 50 grams per kilometer. In that case, you have to make sure you can get the entire 18%. You put it under the main pool and not under the special rate pool. So these are the small concepts that you need to keep in mind, which will give you certain marks, which will make you pass the exam with flying colors. And then moving on, you have to get only 80%. So this is very important. Reading the question is very important. You have to get only 80%. Why? That is because this is used, only 80% is used for the business purpose. So these are the small concepts that you need to keep in mind. And then 14,000, you multiply it by 18% and you get this thing, and you will end up at 2016. Okay, so 2016 is your final value, and then this will give you, how much is it? Yes, 29,800 minus 1,300 minus 400 minus 800 minus 2,700, and then you reduce finally how much? 2016, and this will give you, let's take 29,800 minus 1,300 minus 400 minus 2016 will give you 22,584. Yes, 22,584 is your taxable income. This is what they're asking. Okay, this is your taxable income. Taxable income. This is very important. This is your final value of taxable income. And then we are moving on to the next part of your question. What is the question? Yes, they are asking calculate D's taxable income. Yes. So this is not only the employment income or other income, but also this includes the trading profit as well. Okay. So this includes the trading profit as well. So we are moving on. Yes. So this is very straightforward. So first of all, what you need to do, the employment income during the period of 9 months, that is from April to December, D was paid a gross salary of 5,400. That is very important. Okay. So employment income, we will make sure we have enough space in the board. So employment income, how much is it? Yes, the salary. How much is the salary? 5,400 multiplied by 9 months. Yes, 5,400. You multiply it by 9 months and this will give you how much? 48,600. Okay, 48,600 is your total figure. And then what else? Yes, during the period D contributed a total of 2,340 into CPLC's occupational pension scheme. It is given in the question. Yes. So the pensions, yes, you can definitely reduce this. Pensions, how much is the value? 2,340. 2,340. And then what else? Yes. D used his private car for business purposes during the period he drove 16,400 miles in the performance of his duties for CPLC, for which company paid an allowance of 30p per mile. So that is very important. And then mileage allowances. Okay. Mileage allowances. How much is the mileage allowance? Yes, you need to show a working for that. Okay. So there has to be a working for the mileage allowance. And then let's go to the working. Okay. So this area is for working. So make sure in the exam also you show the workings. So the first 10,000 miles, how much is it? It is 45. Now, where did you learn this? This 45, where did you learn this? Yes, you have learned in the employment income, lesson number 9. If you have followed my lectures, my videos, my notes, you would have understood where to find this. Yes, the first 10,000 miles, you will be paid 45. And then the next 6,400, am I correct? Multiplied by 25, 6,400. Is it given in the question? Yes. How did I arrive at this 6,400? Yes, the total miles is 16,400, clearly given in the question. And then you reduce 10,000. That is how you arrive at 6,400. So this is simple. Make sure you keep these things in your mind. So 10,000 multiplied by 45 multiplied by 0.45, it is 4,500. This is 0.45 and this is 0.25. So make sure these are the small concepts that you need to keep in mind. So 6,400 0.25 will give you 1,600. Okay, 1,600, and then this is 6,100. Am I correct? Let's check it through the calculator. Let's check it whether am I correct. 4,500 plus 1,600, yes, 6,100. And then how much is this person paid by the company? Yes, how much? It is clearly given in the question. How much? Yes, 16,400 multiplied by 0.3. Yes, so 16,400 multiplied by 0.3. Okay, this is what this person has been paid. Yes, so this he has paid 4,920. And then finally, how much is the value? Yes, 6,100 minus 4,920 will give you 1,180. Yes, 1,180 is the value that you can deduct this. Okay, so 1,180. You have to reduce this from here. Why? This is the mileage allowance that this person has to receive. Okay, and then what else? Yes, D spent 460 on a replacement suit which he only wore. Yes, so these things are not allowed. So the replacement suit, this is not an allowable expenditure, but you need to make sure you are showing this as 0. Okay, and then what else? Yes, D received a premium bond price of 500. Premium bond price of 500. So is this an exempt? Is this income? So this is something that the person is receiving as an income. Yes. Is this need to be taxed? No, this is 0. We don't need to be taxed. So bond, this is 0. Okay, so where did we learn this? Yes, we have learned this under chapter number 2, 3 or 4. So if you go through those 3 chapters in my notes, this is clearly available. And then D received an interest of 270 from government securities. Okay, So that is always taxable. So make sure these are the small concepts that you need to understand. So this is taxable 270. You need to include this in the profit. Okay, this is an income. And then what else? Yes, NS and I. So where it was, yes, in chapter number 2, chapter number 1, if I'm not wrong, that is clearly available. So this is always exempt. So this is always exempt. And what else do we need to include? Yes, whatever we calculated as trading profits. Yes, in the previous question we calculated the trading profit. Those trading profits also need to be included. Okay, the trading profit also needs to be included. How much was the trading profit? If I'm not wrong, yes, the trading profit was 22,584. Okay, so the trading profit was 22,584. 22,584. So this value also should be included. We have included everything that is available in this question, and then we are moving on. 48,600 minus 2340 minus 1180 plus 270 plus 22,584 will give you, so 48,600 minus 2340 minus 1180 plus 270 plus 22,584 will give you 67,934. Okay, will give you 67,934. So I hope this is the answer that is available in your suggested solution. You can keep your suggested solution in front of you. And then what else? Yes, the taxable profit. How to arrive at the taxable profit? You need to reduce the personal allowance. Yes, the personal allowance. How much is the personal allowance? Yes, 12,570. You need to reduce this 12,570, and then finally you can arrive at your 55,364. Yes, 55,364 is your final value. How much? And then you are done with the part B of your question number 2, and this is your answer. And then what else? Yes, they are asking another question. What they are asking is that state the two advantages for an employee if their employer had payrolled the benefits. Okay, the benefits, the taxable benefits provided to the employee if the person has already, if the employer has payrolled, what are the benefits? So this is what the examiner is asking. Yes, what is your answer? Yes, the unexpected liabilities. Okay, so there won't be any unexpected, okay, unexpected liabilities. And then what else? There are more benefits, such as you don't need to declare again in your self assessment tax return. Okay, no need to declare. You don't need to declare in your self assessment tax return. So this is very important. So these are the two advantages that you will be receiving if your employer had already payrolled your benefits. So I hope you would have clearly understood the question, the answers clearly given here, and I hope if you don't understand, make sure you can rewind it and watch it again and again and again. So that is the help, that is the advantage that we'll be receiving from the online platform. So thank you so much. We will be meeting with question number 3 very soon.